Welcome back to our weekly Bitcoin and cryptoverse roundup. I'm Corbin Fraser, and this week, crypto is shaking up some global power dynamics. Trump's crypto strategic reserve is making a whole bunch of waves. The SEC's enforcement collapse seems to be continuing, and the first ever White House crypto summit is set to redefine the U.S. Bitcoin and crypto policies. So meanwhile, you've got China reportedly rushing to launch its own Bitcoin reserve. Binance is delisting USDT in Europe, and Ethereum and Solana are pushing major scalability upgrades. So let's dive in. In yet another shocking twist, President Donald Trump has unveiled a U.S. crypto strategic reserve that will supposedly include XRP, Solana, and Cardano, a major departure from the Bitcoin-only focus that many expected. Now, it was announced via Truth Social, but Trump blamed the Biden administration, of course, for attacking crypto and vowed to make the U.S. the crypto capital of the world, which we always love to see at Bitcoin.com. So the revelation sparked a market-wide surge, with the biggest gains in XRP and Cardano. Notably absent from the initial Truth Social post were mentions of Bitcoin and Ether, but Trump followed up with some clarification, posting, quote, "And obviously Bitcoin and ETH will be at the heart of the reserve. I also love Bitcoin and Ethereum." So Eric Trump called the president's Sunday night crypto strategic reserve announcement on Truth Social a genius move to empower retail investors, warning that TradFi better catch up or die. Yet the market had other ideas. The entire price move, actually sparked by the announcement, ended up kind of retracing within about a day as market participants digested all of these implications. So it seems initial exuberance kind of gave way to a little bit more of a sober assessment of the true meaning, scope, and implication of this U.S. crypto strategic reserve. So while the market seems unsure whether to be bullish or bearish, the U.S. crypto strategic reserve announcement, at least in my opinion, is a signal that the administration is making a broader crypto play beyond just Bitcoin, and one that I think benefits projects that are coming out of the US. So this deepens crypto's political entanglement and sets the stage for a bit of a shift in regulatory and market dynamics. So something to keep very close eye on. So the first ever White House crypto summit is happening this Friday, bringing together top industry leaders and policymakers to discuss Trump's vision for the US as the crypto capital of the world. Now, crypto czar Mr. David Sachs confirmed the event, where Trump will reportedly address key figures from the industry alongside the president's working group on digital assets. So the summit is expected to focus on the US crypto strategic reserve, likely providing more detail to follow up on Trump's announcement of the reserve via Truth Social over on Sunday. So Ripple's CEO Brad Garlinghouse and other major industry players rumored to be attending the summit could set the stage for a major shift in the US crypto policy and regulations. So we'll be watching that one very closely. Make sure you follow at BTCTN, our Bitcoin.com news channel here on X. Lots to cover there. And with Trump's announcement of a U.S. strategic crypto reserve, questions are now swirling about the government's actual Bitcoin holdings. And crypto insiders, they want some answers. So Bitcoin Inc. CEO David Bailey is leading the charge over at Bitcoin Magazine. He's calling for a full audit of the nearly 200,000 BTC reportedly held by the U.S. agencies. Now, he argues no one knows exactly how much is left, who controls it, or if any has been secretly sold under past administrations. Now, some speculate that custody providers like Coinbase could have facilitated covert sales, so the pressure is mounting for full transparency on America's Bitcoin war chest. My biggest question is, I want to see that thing grow. Is it going to grow? When's it going to grow? What's the timeline looking like? Hopefully we get some more answers at this White House event. Also, David Bailey claims China is scrambling to create a strategic Bitcoin reserve following Trump's push to make the U.S. a crypto powerhouse. So he's saying that Chinese officials are holding closed-door meetings, which is accelerating their Bitcoin strategy in response to President Trump's leadership. Now, China once dominated Bitcoin mining. So all of the miners primarily hung out in China. It was like the go-to mining space. But later, famously, they banned crypto and banned Bitcoin. Now, I've heard from miners in my own network that said, even though it was banned, it was still going on. It was just a little bit more under wraps. But yet, it seems like reportedly China holds about 190,000 BTC from past seizures throughout, these bans that got to come in, lay down the law, take all their Bitcoin, send their machines packing and say, get out of here. And thus, the Bitcoin exodus from China to Singapore, Dubai, these are all just fun little ripple effects. But some doubt that the stash still exists. So, if this is true and China does hold some reserves, and so does the U.S. as well, it does sort of start kicking off this China versus U.S. Bitcoin reserve race, which could shake up, the whole crypto, Bitcoin, global financial space. And, it would, in theory, almost certainly spark a bit of a Bitcoin price rally, or at least some competitive buying. Nobody wants to buy China's bags. You got to get in before China. So let's see the US move a little quicker. So over to some legal news, and another SEC case is biting the dust. The SEC has dropped its investigation into Yuga Labs, Bored Apes guys, the big monkey JPEGs, all that fun stuff. But this marks another regulatory retreat in the crypto space. So the probe, which began back in 2022, sought to determine whether Yuga Labs' Bored Ape Yacht Club NFTs and its ApeCoin meme coin were securities. So Yuga Labs celebrated the win, stating, quote, "After 3 years, the SEC has officially closed its investigation into Yuga Labs. This is a huge win for NFTs and all creators pushing our ecosystem forward. NFTs are not securities, so this comes as part of a broader SEC pullback with cases against Coinbase, Robinhood, OpenSea, and Uniswap recently dismissed. Other notable cases that have been dropped include the one against Kraken Exchange, which had been accused of operating as an unregistered securities platform. Then there's, of course, the GOAT, Richard Hart himself, that whole case against Hex founder Richard Hart, where it was ruled that the SEC had no jurisdiction over his crypto projects. The SEC accused Richard Hart of raising $1 billion in unregistered securities and spending $12 million on luxury items. But the court ruled his projects didn't explicitly target U.S. investors. So congratulations, Richard Hart. Welcome back to X. I've seen you've been posting a lot more. Keep up the fun vibes, man. I'm vibing it. North Korea's Lazarus group has fully laundered the 499,000 ETH that was stolen in the Bybit hack, leaving behind a balance of just $432 worth of Ether and shifting focus to Bitcoin. Now, according to Arkham Intelligence, the hackers now control over 6,700 BTC, valued at $590 million after funneling funds through unflagged addresses and decentralized cross-chain swap protocol Thorchain. So Lazarus Group's total crypto holdings have dropped from $920 million to $620 million in 2 days, likely due to ongoing liquidation efforts. So while around 10,700 ETH remains in circulation, BTC appears to be the preferred asset for offloading these funds, which is a move likely driven by liquidity needs as well as the relative ease of obfuscation in the Bitcoin network relative to the Ethereum network. Now, I've just got a question here, because if the US is holding a bunch of these assets, we know Trump is holding a bunch of these assets. We know, DJT is holding a bunch of these assets. We know World Liberty Financial is holding a bunch of these assets. Now, at what point do these hacks start becoming national security concerns? So I'm really curious what happens in the future. Is Trump going to go knock on our Rocket Man's door and say, hey, you better clean up your act in there, maybe refund some of those funds, or we're going to have a problem? It'll be interesting to see how this whole political dynamic changes as governments start owning more crypto and Bitcoin, and how that plays into some of the political discussions internationally. Stablecoins are making big moves again. The market added $7.7 billion of new stablecoins in February, with USDS leading the pack. Its supply surged 64%, while PayPal's PYUSD climbed 49%. Tether, the god of all stablecoins, USDT, remains dominant at $143 billion in total, growing by $2.5 billion in just a month, while USDC expanded 7%. Now, meanwhile, Athena's USDE dipped 2.5%, and DAI saw $350 million in outflows. However, Binance is removing USDT and other stablecoins for its European Economic Area, the EEA users. So the move's made in compliance with the MiCA regulations, or MiCA regulations, which is the European Union's comprehensive framework for regulating crypto assets. So they're really coming down hard on certain stablecoins, specifically USDT. Now, affected stablecoins include TUSD, DAI, FDUSD, USDP, and PAXG, which is Pax Gold, with conversions limited to USDC and EURI, EURI, which of course does anyone use that? But yeah, those ones are allowed, I guess, after March 31st. So while deposits and withdrawals will still be allowed, trading support will gradually phase out. Other exchanges like Coinbase, as well as Crypto.com, have already delisted USDT, signaling a wider regulatory push against non-compliant stablecoins in Europe. Meanwhile, you've got Tether. They're also under fire in the US, where lawmakers are considering legislation that could force USDT out, which is a move that some call an attempt to eliminate competition in the stablecoin market. So speaking of Tether, Tether is reportedly bringing green energy and Bitcoin adoption to Africa with a solar-powered kiosk network aimed at charging batteries and educating communities. So the plan locals can subscribe and pay in BTC, USDT, or local currency to access power in regions where electricity is scarce. Tether CEO Paulo Ardoino envisions up to 100,000 kiosks, calling it a bridge to Bitcoin education while tackling Africa's power crisis. With hundreds already in operation, this marks another step in Tether's expansion into real-world infrastructure, from energy and AI to biotech and agriculture. Really interesting watching how Tether's just expanding. So one we're keeping a very close eye on here at Bitcoin.com. Switching gears and over to some blockchain infrastructure news, Ethereum researchers are taking aim at centralization risks with a bold new proposal to overhaul block building and potentially eliminate MEV dominance. Now, MEV, or maximum extractable value, refers to this extra profit that block producers, such as like miners, validators, or sequencers, can earn by reordering and kind of tinkering, inserting and censoring certain transactions within a block. So right now, just 2 entities control 80% of Ethereum's block production. But this new system, backed by Byzantine fault tolerance and randomization, would redistribute power across thousands of Ethereum clients, ensuring fairer block construction and potentially slashing MEV exploitation. So the trade-off here, it might sacrifice some roll-up efficiency in favor of pure decentralization. So the big question here is, should Ethereum optimize for scalability or fairness? And of course, this debate will rage on for quite some time. And then on the flip side, Cronos blockchain is pushing a controversial proposal to reintroduce 70 billion CRO tokens previously burned in order to fund a US CRO ETF. So AI projects aim to also be funded, as well as some ecosystem grants in this as well. So supporters say it's key to institutional growth, but critics call it a bit of a disaster, warning of token dilution and centralization. Some are urging a veto, fearing that it could crush CRO's price. With governance voting underway, the fate of this massive reallocation hangs in the balance. Will the community approve or say no, and shut it down? Solana's Anza is setting its sights on 1 million transactions per second with a 2025 roadmap focused on speed, efficiency, as well as scalability. So the firm, which leads development in the Agave client, aims to push past the current 50 million compute unit block limit while optimizing transaction scheduling, block propagation, and hashing algorithms. By eliminating bottlenecks and refining core infrastructure, Anza is positioning Solana as an ultimate high-speed blockchain, bringing unmatched performance to DeFi, NFTs, and next-gen DeFi applications. And for our final story over here at Bitcoin.com News, we have an exciting announcement from MegaETH, the Ethereum Layer 2, which is backed by Vitalik Buterin and Dragonfly Capital, among many, many more, just launched its high-speed testnet on March 6th, with block times as low as 10 milliseconds and over 100,000 transactions per second. At least in theory, MegaETH aims to redefine Ethereum scalability. So the testnet will gradually onboard developers and users through March 10th with pre-distribution testnet ETH for early adopters. Designed for DeFi, high-frequency trading, and real-time gaming, MegaETH's breakthrough architecture could be a bit of a game changer for decentralized applications. And if it delivers on its promises, Ethereum's biggest bottlenecks may soon be history. But that is a wrap for this week, guys. Crypto's moving fast. With Trump's crypto reserve, China's rumored Bitcoin play, and the SEC's retreat, we're seeing regulation, adoption, and innovation collide like never before. Will the US lead, or will others take the reins? Let us know your thoughts in the comments. Like, subscribe, follow, do the share stuff. Stay sharp, keep on stacking, and we'll see you guys next week.